The S&P 500 continue to hit new highs as we end or near the end of the year. We have heard predictions of 40,000 for the Dow. What do you see ahead for the Dow, the S&P 500 in 2018?
18 is going to be a much more volatile year. What we're kind of really looking at is the fact that we have what we call in our model a panic cycle year. It's largely what we're looking at on a global scale is what we call the year from political hell, that began with Brit exit and then Trump was elected, and we've seen Merkel effectively really lose. She won only like 32.5% of the popular vote. So we're looking at around the globe. The confidence in government has been really sharply declining. And the smart money has been moving into the stock market, and this is what we've been saying all along, that, our model was projecting that we would be going to probably closer to 40,000. I mean, I think we put out that forecast back in 2009. I think it was 11. Barron's magazine just said, "Oh, we were calling for new highs," kind of like a joke, like ha ha ha. Yeah, I'm sure that's going to happen. And so, I mean, ever since then, you've had really this market has been largely probably the most hated bull market in history. We passed 97 months in April. 97 months was the entire length of the bull market during the roaring 1920s that led to the 29 high. So we are, in time-wise, we have certainly exceeded most bull markets. But here you have, at a stage where you hit 97 months. Back then, I mean, shoeshine boys were bullish. At 97 months, everybody was still calling for a crash. So that's why I've called it more or less the most hated bull market perhaps in history. Virtually, I think more than 90% of all the so-called professional managers have missed it. They said only like a week ago that Soros was finally throwing in the towel. I mean, this is just the way it is. And when you get a market that everybody is bearish, it tends to keep going. This is what we put out a report for our clients who called, how to trade a vertical market. And vertical markets are ones that they just can't get a hold of. Everybody keeps waiting for the dip that doesn't necessarily come. So it just keeps running away, and people try to short it. They get stopped out, and I've basically said it's kind of like a party where everybody's drunk and they don't know how they got there. It's just really a very interesting type of market, but this thing can go much higher for a number of reasons. But I mean, aside from the fundamentals that are finally starting to get people looking at this thing as perhaps going up higher, has been the Trump tax reforms. But behind that we have just a systemic level of a decline in confidence in government. And people just don't trust it anymore. I mean, if you're talking about Canada, the United States, Australia, it's just getting out of control. And effectively what you have is governments borrow money year after year with absolutely no intention of paying anything back. And, I mean, the critics of Trump's tax plan, it's going to cost $1 trillion, etc. Who cares? Does it really matter? You don't pay anything back. Obama increased the deficit for this first year that he was in office from $400 billion to $1.4 trillion. So, and he spent more than $1 trillion 4 years in a row. So there was effectively what the Obama, which nobody said anything about, was 400 times greater than what Trump is looking to hand back. So it's all just bias and nonsense, but nobody ever pays anything back, so why should we care?
What's been causing the U.S. markets to continue to hit new highs?
It's a vertical market, and vertical markets are ones where they just keep running, and what happens is that eventually people begin to throw in the towel, and then they start buying on a wholesale basis, and then you're getting close to the tops. Right now, we've had nothing but people looking to buy dips. Brokers that I know have said for the first time in the last maybe 2 months, people that haven't been around the stock market since '07 are at least starting to call back and say, gee, what is going on? So everybody's expected this thing to collapse, and when you have the majority always calling for that, and all the talking heads on TV, it does exactly the opposite. The majority always has to be wrong, because the majority is what fuels the markets. It's if everybody's bearish, then who's going to buy it? The only people that buy it are the ones who keep trying to short it, and they have to cover their shorts. So it's just a very interesting market, but I mean, this has happened historically, several times. That's why we put out reports that, how to trade a vertical market. You have to understand what the differences are. And this is just one that keeps running away on you.
Is a new tech boom behind the climbing NASDAQ?
I mean, yeah, you always get sector shifts all the time. You'll notice if you really want to look at the differences between them, the Dow is the big money. And that's, predominantly foreign money. I mean, you can look at it from, for example, when the Japanese or the Chinese would come in to buy, real property, not the individuals. What do? They always buy the trophies. And, the Japanese have bought Rockefeller Center in New York. They buy the big name things. All right. And in stocks, they do the same thing. They're not interested in an IPO that's going to be listed on NASDAQ. That's too speculative for them. They want the big 30. That's what they do, where they can park big substantial amounts of money. The S&P 500 is a broader market. It gets some of the foreign money, but it's predominantly, I would say, institutional domestic money, pension funds, things of this nature. And then the NASDAQ tends to be more of the retail speculative market. So you'll notice in a bull market like this, what has led all the way up? And it's been the Dow. Then the S&P comes in, and then the NASDAQ comes in. When it finally peaks, you'll see the Dow will peak first and start to decline or go sideways to lower. S&P will be the second one, and the NASDAQ will be the third.
Does the U.S. tend to have market shocks every 10 years? In 98, it was long-term capital management. 2008, the Lehman Brothers. So does that mean another shock is due in 2018?
2018 is going to be a big volatile year, but no, those were each different. The long-term capital management crisis of 98, that was caused by over-speculation in the Russian market. And when the Russian bond market collapsed, what happened was that because there was no liquidity, then they start selling everything else to raise money. So this is the danger that you have to understand that exists. It's really what we call a contagion. And this contagion is what really breaks things apart. Our greatest risk going forward is we have a liquidity crisis. And liquidity is only about 50% at best of 2007 levels. Most of the retail, not in the market. The governments have been just looking to raise money on everything possible, and what they've done is they've chased a lot of the banks out of the industry. So they're no longer really participating in market making, things of this nature. And I mean, I know one of the lawyers that was for one of the big banks who left, and he basically said what's going on is that the government walks in and it says, we want $2 billion and you're going to give us a $2 billion fine. And so what happens is they say, we don't care what the law is. We don't care what your defenses are. This is what we want. And the banks have been paying these fines. And it has led to the impression that they're too big to jail. And what's really going on is that there's deals cut behind the scenes. All right, they will pay like a $2 billion fine. And what happens is then the government protects them and nobody can file a lawsuit against them. You had, after the dot-com bubble, I mean, all the big investment banks paid a few $1 billion in fines for putting out false research. All right, every class action lawsuit that was filed against them, about 26 of them in New York City, were all dismissed by Judge Pollack. And he says, oh, well, you should have known. So how can they plead guilty, pay these big fines, but then they can't be sued? It's part of the deal. The government says, you give us this money and we'll protect you and any lawsuits will be dismissed. If you don't pay us, then we're not going to protect you and the class action lawsuits are going to take you down. So it's been like an old mafia protection game. And this is what all the governments are doing. They're just coming in with huge fines. And if you take the LIBOR scandal, I mean, that was, a joke. Saying, oh, manipulation. They did not manipulate the interest rates, change the trend. Yes, what they've done is what everybody has done in the industry. Okay, where are the stops? And they move it up 2 or 3 points to get them. But it doesn't change a bull market into a bear market. But the way the government portrays it, they've actually changed the direction of interest rates, which is nonsense. I mean, the central banks do that. And so they just pay these huge amounts of fines, and then nobody gets sued. All lawsuits are dismissed. So the banks have been really creating reserves to pay these fines. And who pays that? It's basically the customers. So a lot of banks now are just simply shutting down their proprietary trading because it's getting outrageous. And they come in and say, oh, well, you made $2 billion, we want $3 billion. And this is really what's going on. So it's creating a liquidity crisis, and the next crisis that we come into, which may not be until about 2021, but it's going to be far worse than 07 to 09. Because there's a lack of liquidity, and that's what the long-term capital management crisis was. The dollar yen went from 147 to 103. All right, and in a matter of weeks, because there was no liquidity.
The junior stock market seems to be heating up right now. Do they run higher in junior stocks towards the end of a bull market, and do they signal that a bear market is around the corner?
I mean, a bear market's not around the corner. Traditionally, what would happen? Yes, you sell the stock market, and what happens? There's a flight to quality. Everybody runs to bonds. Do you really want bonds at negative rates? We're in a bond bubble, not a stock market bubble. And as I've said, governments just never pay anything back, ever. So why would you want debt that the government can change the rules on at any time? And I warn my clients, for example, Italy, when they couldn't pay back, they took 30-day and 90-day paper and they suddenly said, oh, okay, fine, this is now 10-year bonds. And you don't get your money back. You know, he who has all the guns and the tanks and whatever, they make the rules. Anybody in the private sector, if you did that, I mean, you'd go to jail. That's it. Government, they can do whatever they want at any time. So I advise my clients, number one, that big institutions get out of government bonds, period. And municipal, state, local, whatever, right up to federal. The only federal bonds that are relatively safe for at least a few more years are U.S. But other than that, you just got to really be careful. And I would switch to corporate. Corporations can't change it, and if they go bust, you know, you get actually something back. All the assets are sold. If the government goes bust, what do you get? Nothing. I mean, you can't take it's totally unsecured. There are no assets behind it, and you can't run down to the local art museum and start lifting Picassos. So you get absolutely nothing for it, and not one single government has ever survived historically. They always default. That's not the case in private sector.
Is the U.S. dollar, the petrodollar, likely to be challenged in the new year by the petro yuan and the petro ruble?
No. I mean, first of all, that is such nonsense. It's unbelievable. I mean, if anybody dared to look at the numbers, you'll see petrodollar. The dollar is no longer linked to oil. I mean, that's absurd. I mean, oil is less than 7% of the world economy. The U.S. is fully, you know, basically it's a net exporter at this point. This is not the 1970s. I mean, people keep saying, oh, the petrodollar or what. Who cares? Oil is not the lifeblood of the world economy anymore. It's just not. So, what is the strength of the dollar? The dollar is basically the place and the only place big institutional money can go. They're not going to buy, you know, yuan bonds or ruble bonds. I mean, this is nonsense. Why, you know, the Chinese are desperate to try and get their money out of the country because it's illegal. All right, they were using Bitcoin to do so. This is why the real estate market in China has gone to astronomical levels. Why? Because they have no place to put the money. They can't get it out of their own country. So they've been buying basically real estate. So you have these real estate that everybody is analyzing according to Western standards. Oh, it's got to be a bubble. This stuff is going to crash. It's the only place to park money for Chinese. So that's what's really been going on. It's a different market. It's not everything is the same.
Is the U.S. dollar key for the prices of gold and silver?
Well, yeah, the dollar is basically, when we're going towards a monetary crisis, all right, and there will be a reset, kind of like Bretton Woods. They're going to have to come up with something else. And even when I'm in meetings in Washington, there are many people now that realize that they don't like the fact that the dollar is the reserve currency. I mean, you've always had these things. When they formed the G5, part of the G5 in 1985 was the U.S. yelling at Europe, look, you have to create a single currency to compete with the dollar. Why? Because the dollar was up so high. All right, the pound fell to 103. The U.S. is different than Europe. They want a lower currency. If you cheapen the currency, your exports increase. This idea that a strong currency is good for the economy, I mean, it's really kind of nonsense. It's deflationary, not inflationary. So, there are a lot of people that would like to have the dollar not the reserve currency, including the Federal Reserve. I mean, the Fed wanted to start raising interest rates back in 2014. What happens? The IMF was lobbying against them, all the other foreign governments were lobbying, saying, please don't raise your interest rates, because if you do, then you're going to hurt us. So the Federal Reserve has become the reserve currency and central bank for the world. They've lost domestic policy objectives, and this is the major complaint behind the curtain. That if the Federal Reserve wants to manage the U.S. economy, how can it when everybody else is screaming at them? So it's been Janet Yellen, I thought, has done actually a very good job. She stood up against everybody and said, interest rates have to be normalized. Why is she saying that? Because pension funds needed 8% to break even. This is what all the pension funds are based on. So what do we have? The next crisis you're going to see is a major pension fund crisis. California CalPERS. California wants to raise taxes because CalPERS lost money. And that's the biggest pension fund in the U.S. So, you have the same thing throughout all the German pension funds are bust. Nobody can earn any money, and every pension fund is at risk because these interest rates are excessively low. So, the governments have totally screwed everything up, and the ECB in particular is the one that is at the greatest risk of actually going belly up. And people go, how can the central bank go belly up? Because they're not the same as the Fed. They don't have the ability to just create money at will. They have to go back to Parliament and ask for permission. The difference also is everybody was talking about, the Fed and hyperinflation, et cetera, all right? Well, $3 trillion on $20 trillion national debt is not that much. How much does the ECB own of the national debts of all of Europe? 40%. If they raise interest rates, their own portfolio takes a crash. The ECB will lose so much money, and this is why the ECB has been basically reluctant to raise interest rates, because they're trapped. They have totally lost all control of the economy. They've attempted to stimulate, and they're just beyond hope. Completely beyond hope. You have the Italian banks in trouble, the German banks are in trouble. It's just been pathetic what's going on over in Europe.
If the banks are in desperate trouble, are we going to see the same kind of action there that we saw in Cyprus, where they dip into people's bank accounts?
Yeah, this is what they basically have done. They've made it possible that all the European governments, all right, and including Canada, has passed rules that allow bail-ins instead of bailouts. And so Europe is exceptionally vulnerable. And see, this is the problem. You have a clash between the fiscal policy of politicians and the central bank policy. All right, you have central banks that tried to stimulate, therefore creating money, and what did you have on the fiscal side? Oh, we can't bail out these banks, so it's deflationary. So the two have been clashing back and forth, which is why there has been no hyperinflation or all this other nonsense that people kept talking about. You have to look at the whole thing. If you increase the money supply, that's very nice, but then what did the Fed do? The banks complained. So then they created excess reserves. So how much went into the excess reserves? Trillions of dollars. So it's sterilized. You think they're adding money to the economy, then you look on the other side, it's all been taken out anyhow. Then you had China saying thank you very much. They sold all the 30-year bonds and they lowered the maturities to an average of five years or less. So, none of this stuff has worked.
Is the price of gold key and tied to the U.S. dollar?
No, not really. Gold has taken some serious hits, in the sense of governments are so aggressive looking for taxes that, look, 20 years ago, you could buy gold, you could put it in a briefcase, hop on a plane, and leave the country and go. You can't do that today. And they're going after everything possible, and gold has lost its movable quality. About the only thing you can do with it now is basically bury it in the backyard. That's about it. You can't travel with it. So it has lost its ability to be that hedge against the currency as it used to be. It's still going to go up, as with everything else in general, but as a alternative to the dollar, no, not really anymore. Things have changed.
In the U.S., do you see interest rates in the debt markets moving faster than the bank rate?
Well, the banks have basically been making a ton of money. And, if you go look at a car loan, they basically want 4%. And what do they pay you on a deposit? You're lucky if you get 0.5. So, the spread between what banks are paying and what they're charging, and then you look at credit cards up to like 20%, some of them, it's outrageous. And of course the governments don't really protect the people, but you're always going to see the bank rate much, much higher than actual cost of funds. But we're going to start seeing next year more of a collapse in the confidence in government. And as that develops, you then begin to see the government interest rates rising. A couple of our major pension funds that, actually do listen and have double-checked everything, they've gotten rid of all the government bonds. And one of them was in Canada. So when S&P walked in and says, "Oh, you're taking on more risk, you're buying corporate," and they said, "Okay, fine. Here you go. This is Armstrong study, and we double checked it." He's right. Government doesn't, never pays off, and AA, AAA corporates, they pay. So where are we taking on more risk? S&P didn't know what to say. They turned around and walked out.
What's your outlook for gold in the new year?
Still down near term, and then we should begin to start to rise. But keep in mind, what's going to cause the rise is largely a collapse in the confidence of government. And if you walk down the street and you ask somebody, you think the government's going to default, they're going to ask you where your tinfoil hat is. The average person doesn't believe that. So until the average person believes that there's a problem, you're not going to see the metals take off and all this nonsense about petrodollars and hyperinflation. That's very nice. People can sell their newsletters on it and get on TV yapping away. And they've been saying the same thing for almost my entire life. Hyperinflation, all this from the 70s on. That's all I've ever heard. All right, and they don't even understand what hyperinflation is. The German hyperinflation took place. Why? Because there was a revolution in 1918, and they even asked Russians to come in and take over the country because they wanted to be communists. Now, if you had money in the bank and you just saw what they did in Russia in 1917, are you going to stay there and keep your money and say, "Oh, okay, fine, maybe it'll be all right"? No, they withdrew everything and they took it out of the country. There was nothing left. So yes, so the government had to just print money to make the reparation payments. That's hyperinflation. All right, we're not at that stage yet. You have to have a collapse in the confidence of government. It's coming. All right, should start next year, but from there all the way out into the mid-20s, is when you're going to start seeing this trend build. As that builds, then you'll begin to see tangible assets rise.
Are lenders around the world continuing to increase credit or starting to restrict credit?
It depends upon the area. Some areas are definitely restricting credit when it comes to real estate. But again, it's kind of like the S&L bubble. The government, once the government put in restrictions on credit and on real estate, and you couldn't get the amortization, etc., they ended up creating a one-way market. And you're seeing the same thing with real estate on a global scale. The new government, president, head of New Zealand, we're going to put, blocks on no foreigners can buy real estate. Australia, they made it a criminal act for a foreigner to own real estate and not reveal it. London, they put on a stamp duty tax. I mean, property's declining in most of these places. In Europe, because interest rates were negative, they were handing out real estate loans like it was, Halloween, handing out candy to kids. So they were doing exactly the same thing, no credit worthiness. They don't care. They're getting, 5-8% interest. That's what they want, because if they looked at the central bank, they were getting, negative.
Throughout history, are there any examples of debt bubbles that did not burst?
No.
Is debt
I can't
slavery?
think of any.
Yeah, right. Is debt slavery the new politically correct form of slavery?
I mean, this is historically what always happens. It's, probably the most dramatic one was the city of Mainz in Germany. They borrowed money, and that was the mecca for the economy. That's where the Gutenberg press was invented. And so they thought all this money was just going to keep going, because it was kind of it would equate it to like a dot-com bubble. And they kept raising taxes so dramatically, people just said, hey, wait a minute, if I move to the city next door, I don't pay this crazy tax. And they did. So all it did was raising taxes chases people out. They then couldn't pay back their debt, and so they defaulted. They were then invaded by, their creditors, and the city was sacked and burned to the ground. I mean, that's the good old days. But I mean, we're heading towards that. I mean, this system is unsustainable. You have a pension crisis that is monumental. I mean, people expect to, their whole lives have been based upon this Marxist idea. And what they don't realize is that government has hurt the private sector pensions because with the low interest rates. And then in the public sector pensions, they never put the money aside, because they always assumed, like the city of Mainz, that, we'll always be able to tax the fools. They're dumb enough, and we can just tax them. And you're getting to the point that's not working.
Has China's credit boom caused the world to be flooded with debt from China?
Well, like I said, China's debt is interesting. There are differences there. They're excessive on the debt level, mainly because the Chinese have not been able. It's not a free currency. They can't simply take their money and leave. So they've been pouring it back into real estate, and so you have, yes, a lot of these condos and things that are going for millions of dollars, which is incredible prices, and nobody's living in them.
Are there a number of factors that could affect the oil market in 2018?
The main thing that would really affect oil is largely the prospects of a Middle East war.
Is the rush to electric vehicles causing bull markets in some of the base metals?
Yes, but I think a lot of people are now beginning to realize that the idea of an electric car actually supplanting combustion engines, you're looking at probably another 70 years. We're going to have to come up with something a lot different. I mean, how do you charge your cars when people are living in high rises in the cities? There's not enough charging stations around, and so I mean, I think it's look, the fax machine, people may be surprised, but it was actually patented during the 1860s. It took 100 years before it came to the market. So you're looking at largely the same thing. It's electric cars. I mean, are interesting, but the prospects of it actually displacing sizable amounts of the combustion engine cars is not likely in the United States or North America. In Europe, gasoline is so highly taxed. What you see over there in prices is per liter, not per gallon. It's quite, the whole socialistic system in Europe is very, very abusive, and people don't realize that you're looking at even like the tax rate that Trump was complaining about here is at 39.6 is the top tax rate. You go to London, it's 47%. And that's lower than most places. By the time you get done in Germany, you're lucky if you get, really 30 cents on the dollar. You got VAT taxes, or like sales taxes, at 20%. Plus you got income taxes. And you're taxed on everything under the sun. And the governments are still broke.
Bitcoin, cryptocurrencies, and blockchain, are they ushering in a replacement for fiat currencies?
Well, I mean, people don't, they use the term fiat as if it's paper money is fiat, and it's not. Fiat means a declared value, all right? We had that under Bretton Woods. They declared gold at $35 an ounce. As long as everything floats, a currency float, it's not a fiat system. All right, but Bitcoin is no different than the U.S. dollar. It floats. That's it. The worst part about it is that it's not a real viable currency. You have 16 million outstanding, and that's it. It's more like a share price. It's a .com bubble. It's not something that's going to replace the dollar that everybody in the whole North America alone could use. Come on. There's more people than that in New York City. So, it's not a viable replacement for paper money. The governments want to get rid of paper money because they want basically everything electronic anyhow. Why? Because then they're going to be able to tax you on absolutely everything. You're not going to be able to find a quarter in the parking lot and say, gee, where's our 12.5 cents?
Do governments want to create their own cryptocurrencies?
Yeah. There's no question about that. Even Bitcoin, nobody really knows who invented it. There is reasonable speculation the government did it themselves to get people interested in it to begin with, and then seize it, and then they come in with their own. You would think if somebody developed blockchain, they'd be out here asking for royalties or something, or taking credit for it, appearing on a nightly show saying, yeah, I'm the guy that created this. Nobody even knows who it is.
Are governments likely to criminalize private cryptocurrencies?
Yes, that's already happening. You've got China looking at it, you've got Europe looking at it, and U.S. It's criminalizing it from a different perspective of where's their share. And anybody that thinks that you can go to a cryptocurrency and not pay taxes, good luck. They will probably take your house, your everything, and I mean, like I said, they got the guns in the tanks, and they can change a law at any time. And what do they do with this stuff? They just simply say, oh, terrorists use it. I mean, now, everything is for terrorism. You got to take your shoes off when you get on a plane. It's ridiculous. They use that excuse for absolutely everything. One of the girls in our European office simply sent 200 euros to her father, all right, and she gets called down, where'd you get the money? 200, that's it. She has to explain, oh, okay, fine, and prove that she had a job where she could get the 200 from. Where'd you get this money? I mean, it's absurd.
Well, when you said governments want a piece of cryptocurrency, South Korea right now is considering a capital gains tax on Bitcoin.
Sure. I mean, you have the same thing going on in Europe, and you have the same thing going on in the United States. And I wrote a piece about this. It depends upon what the definition is that government applies to it. Is it a currency? If it's a currency, you owe us right now, oh, it just printed 18,000. That's a profit. The whole thing, 18,000, give us our share. If it's a stock, then you don't pay tax until you sell it. It all depends upon your definition. And how are they going to define it? If they define it as a currency, that's the worst. Your exemption maximum is $600. That's it. Anything else over and above that, you have to report how much you made, and if you didn't, there's interest, penalties, and criminal violations as well. So, Bitcoin honestly should have just not called it a currency, just said these are shares in the company that issues the currency. That would be different. Calling it the currency, wait a minute, now where's our money? You made it already. And if it's a currency, you don't have to sell it.
A number of junior resource companies are now turning into cryptocurrency or blockchain companies. Is this cryptocurrency blockchain market comparable to the .com bubble?
Yes. I mean, look, there's so many different currencies running around now. Who's going to accept them all? And if you accept them, okay, fine. If we sell services and the Bitcoin is 20,000 today, and by the time we go to try to convert it, it's now down to 15. No, thank you. Not interested.
Has China been able to stop the flow of money out of the country?
Not completely. I mean, there's always different ways of doing it. A lot of the trade statistics were significantly altered because China didn't realize what they were doing, what was going on. Any companies that had a license to deal internationally, they were using Hong Kong back and forth to get money out.
Will the Trump tax plan put pressure on Canada to lower taxes to be competitive?
It's putting pressure on everybody. I just got back from Europe last week. I had to go meet with some people in Parliament over there. They are scared to death. The German auto industry said, hey, you're going to have to compete here. I mean, effectively, governments have been abusing corporations for way too long. Who owns most of them? It's pension funds. All right. So they've taxed the same money 3 times. The company makes money, so it pays a corporate tax. It now wants to pay out the dividend, it has to pay a dividend tax. Then you receive the dividend, and then what happens? You have to pay income tax. The same money 3 times.
And in Canada, we have sales taxes, so you pay it again.
Exactly. I mean, you're taxed on everything constantly, and government produces nothing. it promises the moon, and it does absolutely nothing. Every time you get one of these elections, and what happens? Oh, we're going to go tax the rich, and we're going to get those, and they call them every name under the sun. Fine. Does it ever lower anybody else's taxes? No. All it ever does is put more money in their pockets. I was down in Australia, and they said, oh, they were putting in the luxury tax. We're going to make those rich people pay. We're going to tax and the slogan was, we're going to tax their Ferraris, their fur coats, and their French wines. And everybody cheered. All right? Every time I went down there, I only saw like maybe 2 Ferraris in Sydney because they were already taxed 100%. Nobody wore a fur coat because it was too hot. And everybody always gave me Australian wines, never French. But it was a great slogan. Everybody voted for it. What would they find out? What was included? All electrical products. You bought a TV, you bought a radio, everything was taxed. Suddenly, all you were entitled to was a 10 in the field. And that was it. If you used Wi-Fi, oh, that's electric, you had to give us a tax. Luxury. So, look, government is basically the biggest con job you've ever seen. I mean, it just keeps growing and growing and growing, and it takes, a huge chunk of the gross national product. On average, it's about 40%. And they produce nothing.
We keep hearing Canada has debt bubbles. What's your outlook for Canada in 2018?
Well, I mean, it's Trudeau is basically just taking the whole thing and going crazy with it. These people just have this Marxist mentality. And they don't look at the numbers, they don't look at any of this, and the more you raise taxes, the lower the economic growth is, period. I don't care what country you're talking about. You lower the economic growth, and what happens? Unemployment rises. In Europe, they call it the lost generation. Unemployment among the youth has reached 60% in Southern Europe. 60%. In the Great Depression that everybody talked, it was a depression, it was horrible, and people jumping from river, out of windows and stuff. What was the unemployment rate? 25. 60% is a slightly more than 25%. And they call it the lost generation. Government, has become our greatest enemy towards economic growth and the stability of our future. They just consume everything and waste it. It's just not doing anything.
How is Prime Minister Justin Trudeau perceived on the world stage?
Not real favorably. They more laugh at his socks, but other than that, the same thing with Merkel, all of them. Britain doesn't really have a politician that stands out. Europe doesn't even have one. If you ask most people outside of Europe, they think Merkel's the head of Europe. She's the only person they've ever seen. And she's just Germany. Trump, you have CNN, ABC, CNBC, doing everything they possibly can to overthrow him. It's amazing. Do we have really anybody in the political world that can stand up to all this nonsense? It's highly debatable.
Are ETFs a safe investment or an accident waiting to happen?
Well, the biggest problem with any type of ETF or something is the market makers. And as long as they get deep pockets, okay. But if if it goes against them, will they be able to make market? We have one girl in our company that one of these cryptocurrency things, and all of a sudden she tries to sell, we have to verify that it's you. For 2 months they've been asking for documents. she has to send in this and that. And, oh, well, we're not sure this is really your money. I mean, oh, it was okay while she was trading, and then she wants to sell something and she can't? I mean, a lot of this is just outright fraud.
What do you see ahead for real estate in Canada, the U.S., and around the world?
Real estate is basically overall in a declining mode now. You still have some places there in Vancouver with the Chinese trying to get money and just parking it, and they're doing this, they do the same thing over there in China. But I have a friend who's a real estate agent in New Jersey, and he said if the property values for the average home ever got back to '07 levels, he said half the state would be up for sale. The high-end market, which was going, Connecticut, Miami, New York, London, Sydney, Toronto, what's happened? Governments have been going after them and passing all sorts of different, criminalizing it or taxing it. London put a stamp duty on it. The U.S. Ordered that title companies have to go through every corporation to see who's really behind it, and that they applied that to New York and Miami. So it's been, real estate has seen its better days, that's it. Now you'll see the shift more towards equities, that's it. It's more or less the last place for serious money to park anymore.
Do you see anything positive in geopolitics?
No, not really. A lot of posturing. The biggest concerns more is for a Middle East war. You're having this rise up between the Sunnis and the Shiites, Saudi Arabia versus Iran. And it is building. It is definitely building. And as the economy turns down, they need, to keep people occupied. War is something that often is started to divert people's attention from their own governments.
What sectors are you investing in right now?
Well, I advise way too many institutions globally, so I'm personally not allowed to invest. But I would say, just mainly, the main thing I'm looking at is right now is still the blue chips for a while. After that, and you start seeing the S&P overtake the Dow, then you're looking at closer. But we have some resistance in the Dow in the mid 25 zone to 26. After that, there's a little bit more around 28, but really the significant resistance doesn't come into about 36,000.
With almost a year in office, how is President Trump doing?
Well, despite mainstream media, he's actually been doing pretty good. You talk to, honestly, politicians off the record, and a lot of them envy him. They say, man, I wish I could actually just say what I really thought. So there's pluses and minuses. A lot of people think that, Trump is crazy, but on the other hand, what the heck he actually is thinking. Where these other politicians, they just lie all the time. So it's interesting, but highly debatable.
Have you ever met the Donald?
At a party in New York. No, I don't advise Donald Trump.
How's your movie, The Forecaster, doing?
Good. They're actually converting it into a Hollywood movie now. I guess the success of The Big Short, they want to basically do that. Oliver Stone was the first one running out to trying to get his hands on it, but he wanted carte blanche on what to do, and I didn't feel comfortable with that, so I said no. But of course, I knew he would be interested. Why? Because of the Russian connection. So but a lot of people would like to show this because effectively the U.S. was interfering in the Russian elections, and that's how Putin even got in.
Martin, just before we go, can you tell us a bit about Armstrong Economics and how people can subscribe?
Mainly, go to our website, ArmstrongEconomics.com. I mean, you can go on where we have, we're opening up our computer systems for the average person to use. We call it Socrates. So it's writing reports. It's a fully functioning artificial intelligence system that actually writes the reports on virtually everything around the world that moves. So you don't have to worry about bias or analysts, who have one particular view versus something else, or did he have a good night last night? Did he drink too much? He had a headache and he didn't look at something. So it's different. I mean, we are one of the few, if maybe the only one, that has a business license in China. China granted us our business license because they know that it's completely written by a computer. They don't have to worry about and hidden in paragraph 3, by the way, overthrow your government. Yeah. So it's a computer that writes everything, and I mean, it's really the way of the future. That's it. I mean, analysts are being kind of pushed out. And we have MiFID II coming in Europe in January, and so institutions can no longer hand out the research, and they have to actually charge for it. So, I mean, up to now, clients have been, they more look to us than they do to the banks, because the banks have been caught putting out bogus research way too many times.
I wanted to start off, if we could, with the CPM Group. This is Jeffrey Christian's organization. They've been thinking the sidelines in recent years on the precious metals. He issued an almost $40 target for silver next year, noting tight supply and demand. Any comment?
I mean, obviously, silver is going to get to $40 an ounce at some point. Whether it's going to happen next year or not, I don't know. I mean, it's certainly possible. Don't know that it's something that you want to count on or bet on, but I do think that the price of silver is going to go up. So, whether it goes up to $20 an ounce or $25 an ounce, you're still going to make a lot of money if you buy it or if you buy silver stock. So even if it doesn't get that high that quickly, it still makes sense to buy silver.
You haven't really been, I guess, the biggest fan of the cryptos in recent years. And just in the context of the precious metals, even if you're not a big advocate, but do you think that it's possible it might be almost de facto indication of looming huge inflation? You have this market that's at least semi-free, Bitcoin, and then you have gold and silver, which are shackled by this enormous paper money scheme.
If you actually subscribe to that type of manipulation, the same thing potentially is going to happen to Bitcoin, because later this month they're going to be trading Bitcoin futures. And certainly Bitcoin futures are going to be more susceptible to manipulation than gold futures, because gold futures actually settle in real gold, whereas a Bitcoin futures will settle in cash. So it's much easier to manipulate a market that cash settles than one that settles in a physical commodity. So that's going to happen. But, I think the real relevance of these cryptos now is that, like, particularly in Bitcoin, since so many people now admit that Bitcoin is not going to circulate as a currency, that it's too slow, it's too expensive, it's too inconvenient, so it's not going to actually circulate and achieve the promise that its original adopters were so enthusiastic about. Pretty much people have abandoned that, but now they claim that the value in Bitcoin is that it's digital gold, that it's now not really a medium of exchange or a currency, it's just digital gold, and that people are just going to buy Bitcoin as a store of value. As an alternative to actual gold, they're just going to buy this digital gold. And that's kind of the phase that it's in now, and that's kind of why you're seeing the institutional demand, because obviously when a hedge fund is buying Bitcoin, it's not buying it because it wants to use it to buy a cup of coffee. It's buying it because it thinks it's going to appreciate. And so the idea that Bitcoin is going to supplant gold and that it's going to be a store of value, and I even hear people thinking that central banks are going to use it as a reserve. But this is where we are in this phase of the bubble. Yeah, I have no idea how much bigger this bubble could be. I mean, it could certainly grow to be the largest bubble in the history of the world. I don't know. I mean, it already is probably one of the largest bubbles. Maybe it is the biggest. I don't know, but I think it's an enormous bubble. I do believe it's going to pop. That does not mean that the price can't keep rising. I mean, obviously, look, it's almost at 12,000. And, I said on interviews, I got quoted in a newspaper a month ago. I said, well, it hit 8,000. Why did it go to 80,000? I mean, who knows? I mean, that doesn't mean that people can't make money buying it. There are people that bought a lot of .com stocks and sold them before they went to zero and made profits. Then again, there are a lot of people that bought it at the high and wrote it down to zero and got wiped out. Same thing's going to happen with Bitcoin. It's just that you don't know who those people are yet.
See, it looks to me like it might be paving the highway, the cryptos, for more freer markets as those assets migrate to the blockchain.
Bitcoin, I think, and these cryptos are more of a speculative mania, than an indictment of the dollar or the euro. I mean, I think the early adopters that got in, the free market libertarian guys, anarcho-capitalists, I mean, they were attracted to it. And, I outsmarted myself. When I first learned about it, I was saying, look, well, it's not going to work. And I still don't believe it's going to work. But I underestimated the ignorance or the greed of other people into not understanding that and just to buying it anyway. Because the same reasons that I was buying gold, a lot of people were buying cryptocurrencies, and they have an opportunity now to sell them and make, more money than I'll ever make on gold. I mean, the amount of appreciation that Bitcoin has already had is by far greater than anything we're going to see from gold. I mean, it's just not, going to happen. Not unless the dollar goes to zero, right? Unless we have massive hyperinflation. But then it's not just going to be gold going up. It's going to be the price of everything going up. And that is one of the reasons that you can show that the rise in Bitcoin is really not signaling that we've reached a point where we've lost confidence in fiat currencies, because we're not seeing rises in other commodities. I mean, you're not seeing, big increases in oil prices and metal prices and, agriculture, gold, silver. I mean, it's not like everything is going up. It's just the cryptocurrencies that are going up. So that really doesn't look like a loss of confidence in the dollar or the euro. It just looks like a huge increase in speculation in the crypto. There's going to be a loss of confidence in the dollar. And then the question is, when people finally lose confidence in the dollar, will they also lose confidence in cryptocurrencies? I mean, there are a lot of people out there that think, oh, yeah, when we have a currency crisis, people are going to go to the cryptocurrencies. I think the currency crisis will include the cryptocurrency. Will dump their dollars and their Bitcoins and buy gold.
I agree with you. I think systemically we will also have huge corrections in cryptos when the fiat money bubble implodes. But that still, leaves the big question mark. What will be the tipping point? What's going to send us over the edge?
Murphy had a law, right? Anything that can go wrong will go wrong. And there's so many things that can go wrong here. One of them will, right? And so, but you just don't know until it's over whether there even will be a pin or whether the bubble will just deflate on its own. Right? It doesn't even need a pin, right? The air just starts coming out of it. And, when you mention inflation, you happen to believe, if you're one of the people that believes that these cryptocurrencies are just getting started, and believe me, I talk to a lot of people who think buying now is like getting in early, right? I mean, even though Bitcoin is at 12,000 or, they think that you're still getting in near the ground floor, right? And they think it's going to go up 10 times, 20 times. Well, if that's the case, right, because right now, all these cryptocurrencies have a combined market cap of about $350 billion. If they go up another tenfold from here, that's $3.5 trillion. And what that represents is massive inflation. Because if you view these cryptocurrencies as currencies, that is an enormous increase in global money supply. And of course, if they go up 10 times after that, if they increase 100-fold, then you're talking about 35 trillion. I mean, you're talking about an amount of money that's just, impossible to fathom. The question is, this is pure inflation, because there is no added production associated with this purchasing power, right? The people who are getting rich owning Bitcoin didn't produce any products. They didn't create any services. So there's not a factory there that's producing more consumer goods that people can buy. So to the extent that you've gotten rich on Bitcoin, it's at the expense of somebody who doesn't own Bitcoin. Because all that's happening is money, purchasing power has to be transferred from people who own dollars and people who own euros to people who own cryptocurrencies. So while the people who own cryptocurrencies are going to find that they're now rich, the people who don't own them are going to find that they're poor.
Yeah, this notion, and it is a false notion, that Bitcoin is just created out of thin air. It takes a tremendous amount of resources. You know, you only have 16 million circulating, and frankly, it's much smaller than that because
there's 16 million Bitcoins, but there's 16 million Bitcoin Cash. There's 16 million Bitcoin Gold, and there is an unlimited number of spin-offs or forks, whatever they call them, that can be spun off of Bitcoin. So to say that there's only 16 million, it'd be like if I was an artist, you know, I make a painting, you know, and so, well, these are the only ones I've made. I can keep making them.
You're right. It's an endless supply of paintings can be created. But you know what? There's only so many Pollocks.
If he's going to keep on, you know, saturating them, there's Bitcoins, you know, the Bitcoin brand, if there's Bitcoin Gold, okay, there's going to be Bitcoin Silver, Bitcoin Platinum, Bitcoin Supreme, Bitcoin, you know, Improved, New Bitcoin, Bitcoin Plus. And plus, not only are there all these new cryptocurrencies that are branded Bitcoin, but you have, you know, 13, 14, 15 other, the world gets satiated.
Let's talk to the satiation. What is that level? What is the level? And I would argue, and I've heard some interesting debate in this area, I think you could make the case, we're still in early days.
Look, I don't know. We won't know this till the end. But eventually, right, it's all about demand, right? The supply keeps growing of various cryptocurrencies, and the demand is there. But at some point, the demand is going to go away, right? Once the bubble pops, right? If, let's say, Bitcoin goes, let's say, I don't know where it's going to top out. Let's say it goes to 20,000, and then it crashes down to 2,000, right? 90% decline. A lot of the demand is not going to be there. I mean, a lot of the people who bought it, 20,000, 18,000, 17,000, 16,000, done with it. I lost 90%. What a disaster. All of a sudden now, but all these cryptocurrencies are out there, but all the people that were jumping on the bandwagon, all the people that were looking to get rich quick, they're not there anymore. I mean, maybe the true believers will still be there. And there will, obviously, if Bitcoin goes from 20,000 to 2,000, people still have a lot of profits who got in early, the people that bought them for $50, $10, $100, right? So they can still be confident that, hey, you know, this is fine. We've seen this before. Bitcoin has gone down this much, and, you know, it'll go up again. But there's going to be a whole new crop of people who have been Google buy Bitcoin under Google Trends. That thing has gone ballistic in the last few weeks. And all these new people, believe me, they see that big a drop. They're not going to be so gun-ho about riding it out. I mean, so a lot of this new demand is going to go. Check the Google Trend for Bitcoin bubble.
Yeah, but you can see it. I mean, just take a look at the ETF. Okay, you've got the Winklevoss, GBTC.
You guys are billionaires.
I know. Yeah, well, you know, we've been advising our clients since under sub 100, and now it just hit 1,600. But obviously, if you look at it, it's 3 standard deviations on the weekly chart, plus the volume spike. I see at least a 30 to 50% haircut just on that spike alone. It's that FOMO, right? Fear of missing out. Everyone's afraid of missing the train.
If the Bitcoin people are right about cryptocurrencies becoming the new global money, if you don't own it, the currencies to the people who own the cryptocurrency, because there is no wealth being created. It comes to Bitcoin, a lot of wealth is destroyed to produce Bitcoin because it's very expensive. You have to use, I think it's more expensive to mine a Bitcoin than to mine an ounce.
It's comparable. I mean, you don't say that it's more destructive. I mean, because we ripped a mountain apart and spent a fortune processing the, you know, silver and gold ore. You don't turn away from precious metals because of that.
But that's because once you've expended those resources to extract gold out of the ground, right, you actually have a valuable.
You're making my point. It takes a little bit of introspection to get it. After you've spent a year to mine one Bitcoin, okay, thousands of dollars of equipment, and yes, an enormous amount of energy, but you do have a commodity. And this commodity, just like gold, has some amazing characteristics that allow instantaneous and virtually anonymous, if you want to go to the trouble, transactions.
Are those any better than the qualities that all the other cryptocurrencies?
Absolutely. And they are because of the developers. And the huge node backbone that is at the heart of Bitcoin is unrivaled. It's unprecedented. And as a result, it creates prima facie Metcalfe's Law's network.
Look, I just saw, one of the biggest places to use Bitcoin, right, is China. China accounts for a lot of the energy costs, a lot of the trading volume. I was watching on CNBC this morning, and they were interviewing Jack Ma, of Alibaba, the Amazon of China, and they asked them, do you have any plans to use Bitcoin? He goes, no, not at all. We don't even look at it.
Richest man in the world. Bezos has his own coin now. Mostly that's xenophobia, Peter, with China. Take a look at Venezuela. You've got tens of thousands of people. Their only means of subsistence right now in that horrible regime is literally mining Bitcoin. They're making up to $500 a month.
Yeah, obviously if the bubble bursts, then it's not going to work out. But while the prices are this high, sure. I think people that live in countries that have a lot of inflation and irresponsible governments, which is pretty much everybody, they need to get into gold. That's what they need to do. Gold money. I mean, they should just be opening up accounts at goldmoney.com, and they should be transacting in gold. They should be saving and spending and earning in gold.
Yeah, well, gold money is now on the crypto trend. If you want to convert some of your Bitcoin profits, maybe you've had a 10-fold, 100-fold, who knows?
Gold money
accepts cryptos.
And the good thing about the gold money platform is that they are storing in cold storage the cryptocurrency, so you don't have to worry about it getting stolen. You don't have to worry about hacking, and you also don't have to worry about money laundering. They're actually buying a lot of the cryptocurrencies directly from miners, so they haven't been anywhere else. So you don't have to worry that they've gone through some kind of But so they provide a very secure way to store your cryptocurrencies. It's not that they're advocating that people buy them; they're simply allowing their customers to buy them.
They're definitely ahead of the curve there on the cryptos, and a hat tip, to James Turk and the whole crew for that. I think the cold storage thing, that's another topic, but it's an important one because that really is the only way to be sure nowadays. We advocate Ledger wallets and a few of the others, the Trezor wallets, keep the cryptos, and they're very inexpensive. And not only that, but the blockchain is instantaneously downloaded, so you don't have those long waiting times.
Back on the top of gold, I think one of the reasons that you're seeing the interest in digital gold is because you're not seeing any movement in actual gold. And the question is, when is the price of gold going to actually go up? And I think right now gold is kind of functioning the opposite to all the optimism that exists right now for the U.S. economy, for the U.S. dollar, Trump, the tax cuts. But all this is going to fade. In fact, they complicate the tax code. They include more loopholes than they close. So this tax code ends up being worse than the one that they're replacing. It's going to result in much larger budget deficits. So this is not a step in the right direction. Meanwhile, Trump, as a candidate, promised lower trade deficits. We just got the trade deficit today. It matches a 5-year high. I think the trade deficits are going to hit record highs under Trump. In fact, when Trump was a candidate, he promised to take advantage of the low long-term interest rates by locking them in and selling more long-term bonds. But what his Treasury Department has decided to do is sell no long-term bonds and shorten the maturity of the national debt to make the U.S. economy even more vulnerable to the inevitable rise in interest rates. So none of the things that Trump really campaigned on are happening. I mean, we're not getting rid of the regulations. We're simply, rearranging the deck chairs on the Titanic that he inherited from Obama. And eventually, the markets are going to figure this out. The stock market's going to stop rising, the economy is going to sink into recession, and gold is going to go ballistic. If that's the pin that pricks the crypto bubble, it may be. I've been speculating that one of the things that could really undermine cryptos is a big increase in the price of gold, because if it happens, it's possible that a lot of people that own cryptocurrencies might decide, hey, let me take some of my crypto product and buy some actual gold. Gold's now finally moving. Maybe gold gets to 1,400, 1,500. People might think, hey, maybe it's going to go to 1,000. Let me take some of my Bitcoin profits and buy some gold. Well, if a lot of Bitcoin owners decide to do that at the same time, look out.
We'll take a look at your correlation matrices, correlation between Bitcoin and the precious metals as well as the S&P 500 are pretty constant, meaning that they're very closely related to S&P. So take a look at the movement we've had in the ETF. That's usually where we see the signs of frothiness and 3 standard deviation close on the weekly bar above, the Bollinger Band, plus massive crazy volume on a spike. You're near a top, at least short term.
I mean, we'll see, but what I do, again, my crypto exposure really, I guess, is that I own a bunch of stock in gold money. I mean, and I don't, go on television and radio and recommend that people buy stocks. But that personally, I think that if Bitcoin succeeds, right, if Bitcoin becomes even bigger, I'll make a lot of money because I think gold money is going to profit from the Bitcoin bubble if it gets bigger and bigger and bigger. On the other hand, I think if the bubble pops, I think that's also good for gold money because I think it helps with its primary business. So I think gold money kind of wins. One of the best positioned publicly traded companies to profit from the adoption, a wider spread adoption of cryptocurrencies, Bitcoin in particular, especially on the institutional, where you can buy Bitcoin in your Charles Schwab account or your Fidelity account if people can have it on.
In their IRAs. Keep in mind now that you can buy the ETF, the Bitcoin ETF, in your IRA, and I think that's a huge part of the volume spike here.
But they have storage fees in there too. I think storage fees are going to be lower. I think what gold money is going to do is enable you to buy Bitcoin without an ETF.
In the near term, I do see some frothiness, but just try to keep Metcalfe's law in mind, because if we only have 1% of the world, meaning Europe, Asia, and the United States, only 1% have any exposure at all or even a wallet to Bitcoin. Think of what happens with that exponential component.
1% is already a lot. I mean, if you have a product and you get 1% of the people in the world to buy it.
But 50% of Americans own shares. That sounds like a bubble to me. U.S. equities.
What makes the stock market a bubble is that the prices are way out of whack with the fundamental value. And the source of the bubble is all the cheap money. And I actually think the source of the Bitcoin bubble is the same. All these bubbles that we have, and it's not just in cryptocurrencies or the stock market. You've got bubbles in the bond market. You have bubbles in the real estate market. There are bubbles in collectible art and collectible automobiles and all sorts of things. And the reason we have so many bubbles is because of this monetary policy of this world central bank. They are blowing these bubbles. So it's not a coincidence that you have 0% interest rates, negative interest rates, quantitative easing, and that bubbles are all over the place. I mean, people criticize me and say, Peter, you think everything is a bubble. Well, unfortunately, when you get this kind of monetary policy, you get bubbles everywhere. The irony is the one place there's not a bubble is in gold and silver.
And I think that really circles us back to my opening argument. Isn't really the crypto revolution emblematic of an inevitable price spike and maybe even runaway or galloping inflation in the precious metals? If the markets were free, if we truly had a free precious metals, gold, silver, and shares unencumbered by these draconian measures that we see at the exchanges and huge futures arrangements levied against them, then we would have an enormous spike up in the precious metals.
Gold prices were able to rise from under $300 an ounce in 1999, 2000 timeframe, all the way up to $1,900 in 2011. That rise occurred with the futures markets. I mean, so all the supposed manipulation and all this stuff didn't prevent the price of gold from rising back then, and it's not going to prevent it from rising again. I mean, it's going to go up, despite the efforts of whatever the powers that be to try to delay it and suppress it. And there are obviously reasons you would want to do that if you were a central banker or if you were just, working, you were a big, bank, Morgan Stanley, UBS, Merrill Lynch, JP Morgan, all these guys have reasons to want the price of gold to stay down. But despite all that, eventually it's going to go up. And yeah, I do think that what's happening in the cryptocurrencies is a taste of what can happen in gold and silver, but I do not believe that the prices will rise to that extent unless there is massive, Zimbabwe-style inflation in the United States, which is not impossible. Because obviously, if you go back and look at the price increase of gold and silver during the days of runaway inflation in Zimbabwe, gold prices were rising even faster than Bitcoin prices are rising now in that currency. Runaway inflation, then that's possible. But if we just have high inflation, double-digit inflation, 14%, gold prices are going way up, but they're not going to be able to go up, to that level.
Okay, I expect roughly 3 to 5% of Americans and global inhabitants to be involved in cryptos, especially Bitcoin, by the end of 2020. I'm predicting 250K.
All right, so, and right now, the price is 12K, so 250 divided by 12.
And keep in mind, that's just the Forex's daily volume, is around 5 to 6 trillion.
It's a lot. I mean, it's something like 10%, at least 10 or 15% of the world's money supply is what you're talking about. There are companies that are a few hundred billion. I mean, I don't think that it's going to get that big. I mean, I'm not going to say that it's impossible that could happen, but I would say it's highly improbable, because I do think that along the way you would have people trying to cash out. You would have people trying to convert those paper profits into real profits. And will there be enough new people to just enter into the game? Because I think right now there's very few people that are selling. I mean, a lot of people are still holding on, and so that's what's keeping the supply a bit scarcer. But as you start to go up again another 10-fold and 20-fold, people want to get out of something. They're going to want to buy, a fancy car or a new, they're going to have so many paper millionaires and billionaires. They're not just going to want to stare at their Bitcoin riches in their wallets. They're going on their digital wallets. They're going to actually want to have the accoutrements of wealth, right? They're going to want to buy these nice things, and so that those are all sellers that are coming out trying to buy real things. People who are selling those things are not getting paid in bitcoins. They're getting paid in dollars or euros, whatever the currency is, and so there's got to be another buyer willing to hoard what you're trying to spend. As you get higher and higher, the odds of that are smaller and smaller. Meanwhile, you're going to have the futures contracts. It has been very, very difficult to short Bitcoin. There hasn't been a lot of big money on the short side of these cryptocurrencies. And obviously, the shorts there could be a short squeeze, but on the other hand, you can see a lot more selling that could ultimately break the back of this bull market and cause a lot of weaker players that have come in to dump their currency. So it'll be more difficult. So, but I say, look, I'm not going to say it's impossible, right? Obviously, anything can happen.
If you just go to BitMEX with about $100, you can have a 100-to-1 leveraged futures and derivatives contract right now on Bitcoin. Imagine if, like Netflix, Amazon, any of these companies just had 6 million shares. Not a billion shares outstanding, but just 16 million shares. That's like an opening IPO share allotment. You're really trying to put the Niagara Falls through a straw.
Look, I can tell you too from personal experience. I have owned stocks that I wish I sold because they got really high, and I started thinking about how much higher they were going to go and how much money I was going to have. And this is, a long time ago. And then the next thing you know, it collapses. And so I've seen this happen many, many times. And this is the psychology of greed and the fear of missing out and on all the components that enter into the popular delusions and the madness of crowds and believe me, the characteristics that I see and I encounter among people that own Bitcoin and have been involved, they're exactly the same as the characteristics I've encountered. Do I wish I'd have made a big personal bet on Bitcoin? Do I know people who did that and have made a lot of money? Yeah. I mean, this is the one bubble I should have caught, right? It was like a bubble that was right up my alley.
But don't give up on it yet. It still could be SCHIFF Silicon Valley's, wonder boy, self-made billionaire, Tim Draper. He's already calling for at least 100,000.
Look, I don't know if this is 97, 98, or 2000. You don't know until it's over. But important thing, if you want to get the topic, back to gold and what's going on with gold, I mean, the fundamentals have never been better. I mean, and I've said that in the past because it was true at the time. But if I thought the fundamentals had never been better for gold 5 years ago, that may have been true 5 years ago, but it's even better now because we've had 5 more years of money printing. We've had 5 more years of quantitative easing. I mean, the bubbles have gotten that much bigger. So the fundamental case for gold is getting better with every passing day, and especially each day that the price doesn't go up. Yet the reasons for it to go up they get bigger and bigger, right? So once this thing happens, I mean, once, gold finally breaks out, it is going to be spectacular. But look, I think we're going a lot higher than 5,000 now. I mean, probably higher than 10,000. Gold is going to make a...
If we can have digital gold go from under 1 penny, all right, to 12,000, what do you think is going to happen to real gold?
See, there's not that much money that actually moved. You can look at the total market cap of Bitcoin, but how much money actually went in to move it? Because most of the value of Bitcoin is not based on the money that went into it. It's based on just the paper appreciation that came as a result of the marginal buying. I think so. It's going to take a lot more money to move the physical gold market than it took to move the Bitcoin market. But the reality is, though, if the central banks do, come in a bigger way, may not take as much. I mean, it's, and if you do get, and this is where you look at the ifs, none of the big players on Wall Street have any exposure to gold or gold stocks. I mean, they're not there at all. I mean, the hedge funds, the pension funds, the big endowments, all the big investors have no exposure, right? If they just decide they want to have a 2% or 3% allocation to gold and gold stocks, I mean, that's it. I mean, it's not even possible, but that's big money. But at some point, we'll move into the gold market. It's just that they're all going to do it at once. Nobody wants to be the first one to do it. Nobody wants to be outside the box, right? Nobody wants to take a chance to do something that nobody else is doing. But once everybody is doing it, then everybody's going to want to do it. In fact, once everybody's doing it, you got to do it. The consensus money.
As soon as U.S. equities roll over, which is coming, it might be 48,000 Dow Industrials, though, before that happens, or it might be 96,000.
When you look at a lot of these charts that show, what's happened, and in fact, if you look at where we are right now, I mean, the valuations are already off the charts when it comes to, measuring PE or the price of stocks relative to the risk that people perceive. I mean, we're at levels we've never seen, even at the peak of the 2000 bubble or the 2008 bubble. I don't know how much higher the market is going to go. Can the Dow get to 30,000? Maybe, but, every day we're getting closer to recession. Something's going to happen. We could have a buy the rumor, sell the fact with these tax cuts. I mean, they've been bidding up the stock market on these tax cuts for so long. And eventually, we're going to get them. And now what's the market going to rally on? Meanwhile, there's going to be a lot of companies, when interest rates go up, and they've been going up, a lot of companies aren't going to have any profits. So what good is a tax cut if you don't have any profits? And especially if, the dollar gets, raw material costs go up and interest costs go up, and you have a lot of these over-leveraged companies, and all of a sudden they're losing money, the tax cut does you no good, right? Because you have a loss,
It's the kiss of death. I mean, these U.S. equities, if you look at the correlation matrix, I mean, you can see that precious metals are just so negatively correlated with U.S. stocks. So once that rolls over, it doesn't matter what Bitcoin's doing or any other bubble market for that matter.
They shouldn't be negatively correlated because what is the source? The real source of the stock market going up is the cheap money. It's the Fed printing money and keeping interest rates artificially low. Well, that should be even bigger fuel for the gold market than it is for the stock market.
Eventually it will be. I mean, I think we can agree on that. We will see, the precious metals move higher simply because the fiat money has to funnel somewhere. And, Bitcoin can't absorb it all. U.S. stocks can't forever. We've got a bond market that's bloated, 30-year bubble there. I mean, inevitably, it's got to roll into something more tangible. And the one tangible thing we have, silver. I'd like your thoughts with the potential for bigger gains there.
Anybody can look at the ratio of gold to silver, and you can see that where it is now, I mean, silver is cheap relative to gold. Do you think it's going to stay that cheap, or do you think it's going to revert back to a more normal relationship? I mean, I believe that pretty much everything reverts to the norm eventually. And so I do think that silver is going to gain back some of the ground it lost against gold. I just, the question is, when is that going to happen? But if gold goes to $5,000, $10,000 an ounce, chances are that silver proportionally would have gone up more in that environment. I mean, I think it would be unprecedented. That doesn't mean it's guaranteed, but believe me, if gold goes to 10,000, you're going to make a ton of money in silver. Whether you make more money than you would have made in gold, it may not even matter because you're going to make a lot of money.
Cliff High, I don't know if you're familiar with his work. He's involved in neuro-linguistic programming, and he was telling everybody it was going to 13,000, and it's almost just hit his target, okay? Everyone was laughing him off. His big thing now, mantra, is silver. This thing could literally, in the coming years, go 1-to-1 with gold. And as a result, the major populace, he thinks, not the central banks. The central banks will dominate gold. But the people will come in and say, what can I grab onto?
I've heard silver described as the people's gold.
Yeah, it's the people's gold. It's poor man's gold. And what he sees happening is, as soon as 2018, the silver bandwagon. He's looking for triple and then 4-digit silver.
I mean, if you're investing in silver, especially if you're investing in silver stocks, I mean, it doesn't have to go anywhere near that high for you to make a lot of money. So it's that, those pie in the sky forecasts, don't have to come true, right? Silver can go to $100, $200, which is still a very high price. But it's not going to happen without copper, having a move, or without, nickel or zinc or any of these metals are all going to go up. And in fact, grains are going to go up. Energy is going to go up. I mean, you're not going to see that kind of move in silver in a vacuum. It's going to be a broader move in the whole commodity complex because of inflation, probably because of stagflation. And it's probably going to be worldwide. It's not going to be just in the United States. So I don't think it's just going to happen all by itself, like what you're seeing with the Bitcoin. I think when you see that kind of move in precious metals, it's because the world grasps the inflationary aspects in central banks, and this is going to manifest itself, prices going up.
I think case in point, you don't even need to have increased price expectations or inflationary things on the horizon really to turn people to silver. And here's why. You can have something just like Tesla buying up nickel and all these other rare earths, molybdenum and all the rest, in order to make these enormous high-powered batteries.
It could do like a palladium or like a uranium, where you have one commodity just kind of play that is going to occur within a broader inflationary commodity bull where everything is going up. And then, you could have silver that can go up much more. But I think it's going to happen in the context of, just people seeing that there's inflation, people looking for stores of value, people looking to get rid of bonds. Right now people are still holding on to long-term treasuries and gilts and JGBs and all this low-yielding sovereign debt when they're really looking to get rid of it. And they're looking to buy something real in the precious metals.
Very good. All right. Please tell people more about Peter Schiff as well as all the services you provide. Any other contact information?
Gold, you can buy it from me through Gold Money, through Schiff Gold, my website, schiffgold.com. If you want to buy physical gold, one of the products that Gold Money is now selling, and you can go to their website too, we sell it through Schiff Gold, is called Mene, MENE.com. And this is gold jewelry made from 24-karat gold, where when you're buying the jewelry, you're actually also investing in gold at the same time, because they sell the jewelry based on the weight of gold. So the price of the jewelry changes as the price of gold changes. But the difference is, let's say, you go to Saks Fifth Avenue and you spend $5,000 on a gold necklace. You're buying $500 worth of gold, right? So, if the price of gold goes up tenfold, you might be able to sell it and get your money back, but you need a tenfold increase. Whereas you buy a gold necklace from Mene and you're paying $5,000, you're getting $4,500 worth of gold. So there, you don't need a big move in the price of gold to get your money back if you decide you don't want to wear the necklace anymore. But you're storing your wealth while you're wearing it at the same time. So the design fee is very small. You're actually buying gold. Now, you're paying more than you would pay to just buy a coin that sits in your safe, because you're getting the utility of wearing it, right? So you get to wear your wealth, and store it at the same time. So you can get some of those too at Schiff Gold. You can get them at Mene.com. If you've got a bigger portfolio, if you've got more serious money, and if you're a Bitcoin millionaire, take some of your profits and you can open up an account with me at Euro Pacific Capital. Europac.com is our website, and I can manage money for you. You can have a brokerage account. I can help you invest around the world in places like Switzerland, Singapore, Hong Kong, New Zealand. Wherever we want to invest. Get your money out of the dollar, get into good quality companies, some of them, of course, mining companies. I also have a number of mutual funds, including a gold fund that we manage. So we have managed accounts, mutual funds. I have all kinds of ways that I can help you preserve and grow your wealth in the economic environment that I see coming. So that's Euro Pacific Capital. Europac.com is the website to check us out. 800-727-7922. Is my phone number. And of course, don't forget social media. I do the Peter Schiff Show, my podcast on SchiffRadio.com. You can listen to it on my YouTube channel, Peter Schiff. Like me on Facebook, follow me on Twitter, all that stuff. I'm constantly out there trying to put my perspective out in the public realm. And so, you can follow, you can get my newsletters, sign up on Europac.com for, my weekly digest. There's all sorts of ways that you can, stay in touch with what I'm saying, even if you're not a client.